Greetings, traders, and welcome to our presentation today for Boomerang Day Trader for our bi-weekly training class. Before we get started, I'd like you to know that we have our disclaimer up here. It's very important you understand the disclaimer, even though you've seen it 1,000 times like me, that it's always good to remind ourselves, especially in these mega volatile times, that you just have to be aware of the risks and be willing to accept them in order to invest in the futures and options market. I know we hear that so many times, but you just have to reread it again. Aware of the risks and willing to accept them. When the risk gets turned up, like a normal market, say, is running a risk level of like say 1 through 10, you're running at volume 5 or whatever. Right now, the volume is up there at 10 and 11. I mean, the speakers are blowing out. It's really intense right now. So it's important to really understand this risk disclaimer. I always express this on the webinars, and I'll always do that because it's just very important. I want our traders to understand that the trading is risky. Boomerang is going to organize the price and the data and everything very nicely for you, but you have to become a skilled trader, a Boomerang ninja warrior, if you will. That's what I like to call it. So just be aware of the risk disclosure, and we can get started here. I'm going to keep things real basic today. I'm not going to go over days and days and weeks of setups. What I'm going to do is just talk a little about the extraordinary conditions of the markets right now and how we can deal with it. And I've got solutions for you. And I know some of you are a little nervous because I get the emails and all that. And we had a lot of boomerang sales in December from our end of the year sale and everything. And all of a sudden January came and it was like someone just pulled the plug and the bombs started going off in all directions. January, I can tell you this, if you haven't heard me say this many times, was the absolute, without a doubt, over the top, most volatile, historically risky, and intense period of the markets I've ever seen. Now, you're talking to a guy here that traded all through 2008 and 2009 on a daily basis. I was running my newsletter and forecasting the market every day, and it got a little bit tough to forecast, but we still did very well, maintained our 70-80% accuracy back then. Nowadays, you can't do it because the whole thing's like a slot machine in a casino, it's a little bit different. Still, some forecasting is available, and I'll explain that in a minute. But I'm just saying, I was there trading through that period, and that was argued back then that this is the riskiest we've ever seen the markets. I'm telling you, just so you can hear this, these are not normal markets. January and now continuing into February, when I thought it would kind of cool a little, these are the highest risk, most volatile times ever. Just be completely aware of that. I'm going to show you some solutions here, how to solve it. Boomerang's working fantastic, but I'm going to show you some additional things that we can do to really cut the risk back, because there is whipsaw going on like you wouldn't believe. What it's doing is creating a lot of extra fat channels and things like that. Now, I'm kind of going on here speaking because I've already got the confirm that the audio and video are good. Thank you, Ashton, for that. I appreciate that. So I kind of started talking already. But just at this point, if for any reason you can't see my cursor moving or hear me, just let me know in the Q&A section there. I'll have that up and running the whole time. Now, I'm not going to answer questions right away because I want to get through this presentation and show you the stuff I have to show you today. And that is very important that we realize what I just said. Don't think that these are normal times. They're not. And I'm highly recommending that on some days, possibly even like today, if it's too wild and you just, your head's spinning, you're going, holy smokes, look at this. I'm trying to advise you, just stand aside. Just leave the computer, go somewhere else in your house, by your television or outside if it's not too cold or whatever, and just do something else and get away from the screen and let it pass. What I'm trying to say is tend to get hypnotized by the markets and all the activity going on in the markets, and it's very easy to just become like a little bit, how can I say it? You get a little bit addicted to it, and you're just like, oh my God, all this is going on. I got to be in front of the screen here. I got to be trading. And I'm telling you, a lot of times, and I'm guilty of this too, sometimes you look back and you go, man, that's too volatile, and I wish I had seen it coming. You don't expect it sometimes. You go, okay, well, they're going to catch support here and turn around or whatever. Now, of course, Boomerang's very specific rules that we follow, and I'll go over that in a minute. But I'm just trying to say, don't be afraid to stand aside. There's nothing wrong with it. And another most important message, this too shall pass. You've heard that slogan before. This too shall pass. Whenever you're in a tragedy or something in your personal life, you'll hear that from people. They go, this too shall pass. It's the same with these markets. And they will, what I mean by pass means not that they'll rally or they'll keep dropping or they'll go neutral, but that they will eventually revert back to the norm, which means normal volume, a little more relaxed whipsaw and all that. So keep that in mind. My presentation here will last approximately, we're going to cut a little short today because I'm just going to focus on this one thing, and that is trading with Boomerang in insane volatile times. So I'll just be speaking for about another 25 minutes or so. Then we'll go into your questions. Take all the time you need. Not a problem. Um, for those of you new to our presentation, we welcome you and thank you very much for joining with us. Of course, everyone else too. We're always glad to see our regular friends here that have purchased Boomerang and are giving me reports and how well they're doing and everything. I appreciate that. And some of them struggling, and that's just because you're new. Don't worry about it. If you're new to the markets, welcome to the markets. You're now in the most volatile times in history. That's your initiation into the markets. You joined right when it was the most volatile times in history. But we have my boomerangtrader.com blog site here, and you can learn everything about Boomerang on this site. I've really built it out to where you've got all kinds of stuff here. Mainly the blog section here is where you go to get, like today, here's the announcement today where you log in. The different setups here. I recently made this real crystal clear video about the two Boomerang day trader setups. That's all there are. And once you get the clarity of Boomerang day trading with Boomerang, it's a lot easier. It makes the markets will make you think there's 300 setups and all these different things, and oh my God, I'm missing out on this and that. You're not. You're missing out on what all the other traders are getting, which is getting stopped out left and right, getting really roasted in the markets because they're winging it. They don't have a system, or they don't have an exact method, or they've attended some seminars and read some books and stuff like that, but they're still just kind of piecing stuff together. So I'm just letting you know that we have an exact crystal clear system, which I'll go over with you in a minute. And we got all these resources here where you can learn about the Boomerang setups and all kinds of stuff. You can learn about Boomerang on eSignal. If you're an eSignal trader, we have Boomerang available now on eSignal, which is great. Just fantastic. A lot of people joining there, and it's always great to have the eSignal traders there. I've been powering my Ninja trader with eSignal since Ninja was started back, 8-9 years ago, and powering my own other charts prior to that with eSignal for over 20 years. So it's just a really powerful, fantastic company with very crystal clear data, reliable data, and stuff like that. So again, you can go to Boomerang, learn about all these different services connected with Boomerang that I have here. And make sure and watch my History of Trading Mathematics video. It's important to understand our roots in the trading. Like there's Fibonacci there. You never knew Fibonacci looked like that. You might have heard of Fibonacci retraces and things like that. Well, here's the guy who invented them. And while you're there, give thanks to Fibonacci, because when we count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, etc. That's because of Fibonacci. He brought those Hindu Arabic numerals, as they're known, over from the Far East and introduced them to the European marketers and traders, not traders like us, but grain traders and product traders and stuff like that. And that's how they became popular today. So check out that video. I think it's just a 5-minute video. You'll really like it. Learn a lot about the history of trading mathematics. So keep that in mind. If you need anything, there's the site to go to. That's our default site for all things Boomerang, boomerangtrader.com. All right, let's first of all, before we get started on some things I want to show, let's take a look at the volume here. Now, this is a volume meter, and you should all be using a volume meter. In fact, let me go quickly back here. To learn how to make a volume meter, go to Resources and just scroll on down, and there you got a whole article, very simple, how to set up a volume meter. If you have this volume meter or a similar version of it, but try mine first. I think it's the best. I mean, it's got what you need there. You got a 1 minute period volume. You're going to set it on a 1 minute chart. You got a 4 period average, which is shown here, and then you have the ADX put in a histogram form, which tells you when the trend of the volume may be shifting or changing from really active to slower. Good information to have constantly tucked up on your screen like I have mine. What you see here is I've expanded out, but usually I have it something like this, tucked up in the corner of my screen. So while I'm trading, I can see exactly where the volume's coming in. But let me enlarge a little because I want to show you how important this is. The first thing I always do when I'm trading and the day's starting, now this is a West Coast chart, don't mind that. It shows 6:30 is the opening, I know, in New York. It's 9:30, so add 3 hours for the Eastern Standard Time. But what you have usually is the market, like today was actually kind of an average kind of volume opening here, around 700 contracts here on the mini NASDAQ. Above this green line is 700, below this magenta line is 300. That's where it gets a little bit slower. And usually what they do is they blast off the opening up to around 1200 to 1500. Maybe like lately with all this volatility, we're getting these 2000 contract blasts. People, a lot of it's just beginners. They think they got to get in the market. Oh, the market's gapping up 20 points. I got to get in the action, all that. And you don't. You don't have to get in the action. All you got to do is learn how to trade and relax and trade. Well, anyway, the market today was a little more normal here, but you can still see it's kind of pushing 1,200 contracts on a steady basis. I noticed this earlier. And then it kind of relaxed back a little bit, pushed a little bit higher here, and then they started blasting again up here over 2,000 contracts as the market started selling off and everybody started getting all hyper. Here's a peak here, 2,400 contracts average trading there. The actual high there is 27 on an individual 1 minute basis. And then they even got going after the first hour, blasting up to 3,000. Very rare to see that on mini NAS in a quote normal market. I'm showing you this because this is the first sign that this is not a normal market. And I'll show you, well, I'd have to go back a month earlier to show you the normal volume back then, but you just trust me for now. The normal opening volume is around, they'll blast 1,200 to 1,500 contracts, and then usually after 5 to 10 to 15 minutes they'll blast that high. Then they'll settle back just usually above this green line into the 700 to 900 area. Then as the hour or two wears down, they'll start drifting below the 700 average contracts, usually hovering above the 300. And I don't worry about it until they get significantly under the 300 level and they start trading 150, 200. That's a pretty slow market, and you put a boomerang trade on it, should pan out because we're only looking for a 3-point scalp, but they may end up being a little bit less jumpy to get into that, get on the market to move in that direction. You see, boomerang trades are what I call technically momentum blasts. It's where you stack up all the momentum on one side of the trade, you get in on a pullback to the signal line, and you're pretty much counting on, yet in terms of reality, hoping that the market's going to make a momentum blast in that direction. And I say hope. I had one guy who was kind of being a little punkish about, oh, hope, you don't have any confidence in your system. I go, come on, grow up. Everybody who's trading needs to understand that there's no guarantee that when you set up your trade with your perfect system, whether it's Boomerang or whatever this clown thought he had, you always are hoping that the market and the participants in the market agree with that market direction. That's called hope. When you cross a green light on the street, you hope that the idiot over on your right side is not really drunk or colorblind and he sees that he's got a red light. That's called hope. That's not, there's nothing wrong with that. You, isn't it true? It's kind of unconscious hope, but you definitely hope that that guy doesn't plow through the green light. If you've ever been to Costa Rica, that's the most dangerous traffic in the world. I went there once for a nice tropical vacation, and the guy was driving me around, a little tour guide action, and he's like telling me, yep, watch this. And I mean, he's real casual about it. He had a big giant van. I felt so great in his van. And we pulled up and he said, watch this. And some guy just plows through the red light, just doesn't even care, and another car screeches to a halt. They almost smashed up, and he says, yep, Costa Rica here, especially in the main capital city here, we're the world's worst traffic. And he was almost kind of bragging about it. But he showed me while we sat there for 10 minutes, I kid you not, almost three major accidents occurred because these people just plow through the red light. Well, I didn't want to go on the tour anymore. I said, okay, well, let's wrap this up because I couldn't believe what he showed me. Anyway, when we drive in a normal city like in our country, we hope that they understand it. So similarly, there's no shame in saying we hope the market agrees with us. We hope the traders participating agree with us. I wanted to clear that up in case anybody else wonders when I say that, because it's actually a healthy way to think, because that way it keeps you what? Cautious. That's what I told this guy. I emailed him back. I said, you don't sound like you've been trading very long. When you've been trading as long as I have, you start putting risk. When you start out, making gains is number one, and risk is about number five. And when you've been trading a long time, risk shoots way to the top, and making gains is like down there at 3 or 4. I mean, you want, my indicators lining up. This is a least caution trade, etc., etc. So just keep that in mind. So even if I scroll back approximately 2 weeks or so, I just want to show you. Let's take a look at this one. I don't know what the date is. I'll find out in a second here. It's fairly recent, I believe. But this is the first thing I do whenever I open it. I mean, it's like going to work and you see what phone messengers are there. If you something like that. If you have an old-fashioned office and you go in and, well, are there any phone messages? See, here's a blast here coming off the opening. And this has been like a little bit low lately. Again, this is West Coast time, 9:30 New York. And you can see, look at 1100. What's this date here? This is 2/1. So this is the first of the month. It was a little more tepid on that day. I remember that. And you can see here 1400, a little more than what October, November, December was, that's for sure. That's when the market was, quote, normal. Anyway, you can see 1200, they're kind of hovering there. And then all of a sudden, you get in the first half hour, they start, notice how the histograms here start dipping under the green line. You can build one of these for yourself and watch this. Any market you trade, you got to have the volume up there. You got to know how active that contract is. And then they jumped up again, and this was typical. This was first of the month. And then, you start getting after that first hour. It's normal that they start drifting lower. And then you start watching the 300 level line if you're trading mini NAS like I do every day. And down they go. So it's just something to keep in mind. And then you can also see all of a sudden there's a blast here of volume. And you can also notice when things get a little too quiet and they start drifting too low here, just use a little extra caution. So I wanted to show you that. That's very important, but that's the first thing I do when I start trading is I check the opening volume just to see what's any anomalies. Look at the news real quick and all that. But here's the thing. I'm going to show you right now, get right to it. Boomerang is very simple to use. I'm going to show you the exact setups that we use, and then I'm going to show you what I think we should do now until you start seeing, and this ties in with what I was just saying, you start seeing that volume chill a little bit and the whipsaw reaction to these price movements cool down a little. Then you might want to shift back a little bit more towards our regular setups. Now, all of you who are regulars here know exact Boomerang rules. If you own Boomerang, I hope to God you have the exact rules and you've been to these webinars, you've watched my recordings, and you know it's real simple. There's only two trade setups, and that is we have the dynamic trend bands crossing over here and changing color on the first one. This is the dynamic trend band number 1 right here. I'll keep the cursor on because I'm going to need it in a second. And when those get within 1.5 points of each other or crossing, and you've got the dynamic trend band number 1 changing color, in this case you got a sell channel right here. This is an arrow showing that a new sell channel is open, and it's shaded here. You can see it moving down here. When you get the color on the dynamic trend number 1 matching the red color for the sell channel, you can go ahead and trade a pullback to the signal line. Right? We all know that. And there's 3 conditions: the 1.5 spread or less, the actual crossover, or they are matching colors. Now, when these dynamic trend bands are matching color, it's a real powerful directional force in the direction of the matching colors. In this case, sell on this example here. If you've studied Boomerang with us, and I hope you have on the recordings or here in the live room, and if you're brand new to Boomerang and you haven't, then please do that. You need to understand the exact rules. We don't wing it on Boomerang just because the color of a candle is green or this or that. It's got to have its very specific rules. But here's a second level trade that fails to change the color of the dynamic trend band number 2, and it fails to see. In most cases, you're going to see that dynamic trend band number 1 will not cross over dynamic trend band number 2. If it does, that resets the whole pattern. So you got to watch for that. Everyone knows that who's a regular with Boomerang. But then again, this is the second trade that we make. The first one I just showed you, this is called a second level trade. This is a continuation pattern in a what you might call an intraday trend. So now you have to have the counter arrow that tries to force the market in the other direction fail, but you need to see that arrow print. Then you see the arrow print on the new second level direction, and you trade a pullback signal line. These are some of the most solid trades of all because in most cases the trend is established and the dynamic trend bands are going to be matching. Most of these have that condition. So when you get short there, you're going to have that force of those matching DTBs on your side. And that's what we want. And I know that makes a big move and all that, and a bigger move. And you can catch those moves. We talked about that on the last class, which is recorded on the webinar. We talked about using the dynamic trend bands to catch that, and also for hyperscalp to measure the length of the move. And if you're willing to be taking a chance for a stronger move, you can simply use hyperscalp to measure that. So just watch that webinar that I did last time 2 weeks ago and you'll learn all about that. But for today we're going to focus on how to avoid a lot of this whipsaw because it is intense. Trust me, I'm shocked. I mean, it keeps my head spinning when I'm trading, It's like, whew. It's hard to just concentrate on the Boomerang setup and just get, because you see the thing flying all over and you just feel like, running and ducking under a table or something. But you can. Now, this is an example here of a fat channel where the market, they selling off down here and the whipsaw just catch hold and some buyers come in and blast that thing up and kablamo. Up they go. 1, 2, 3, 4, 5 candles straight up. 2 of those are over 3 points in length. This one's 6 points in length. This one is 34.5, 41. These 2 are both over 6 points in length. That's a real characteristic of a heavy whipsaw volatile market. Usually I measure a candle over 3 points or more as being kind of a whipsaw candle. We're getting these 5, 6, 10 point candles all the time since January started. But that's okay. Doesn't affect Boomerang really. Well, it affects the way you watch for fat channels. When a fat channel comes in, you have to stand aside. That's the only way to handle it, unless you're dealing with another type of market. When it's fully whipsaw, the rule of Boomerang is to stand aside. It doesn't matter if you, quote, miss anything, because what you'll miss is getting stopped out in most cases. Now, what I want to show you here, okay, so there, now you've got this here. There's no trade setup here because the market, the dynamic trend band is flat, and that's one of the rules of Boomerang is when you have the flat dynamic trend band, number two, you got to be careful not to trade against that in most cases. Sure, trades will work out. Like here's the matching dynamic trend bands. Here's a pullback to the signal line at 49 and a quarter, and it jumped up to 53.75. But generally, you're not going to take these flat-lined DTBs. You want to see some energizing to curve the thing lower, including, see the prices? Notice how they're running flat in parallel here. See the Bollinger Band and the DTB number 2 and the Bollinger Band on the opposite. Everything's flat here. But notice here how they come down, and when they tap the Bollinger Band, there's a curve effect all of a sudden, which is not seen up here. Notice they're tapping the Bollinger Band. They're not curving up into it. Here they're curving down even as the prices rebound. And those are the areas where we want to take a short trade. So that's really all there is to Boomerang. There's only those two trade setups, and just understanding the basics of not trading against a flat or a super steep dynamic trend band, and not trading into a fat channel. Because if you do, and you think you're going to buy them here, in this case it looks like it worked out. 50 half ran 54. I mean, it actually worked. But dear God, most of these are going to reverse, and sometimes very fast and furious, like this one here. So you don't know. You're going to buy here thinking, well, you'll be tricky. And you got lucky they ramped up 3 points. But the minute they did, crash. So better to avoid the fat channels. Okay, so those are the rules of Boomerang. That's essentially all there is to it. We mostly use the dynamic trend bands now to set up the trades. We still have our bias indicators down here, but the early Boomerang versions relied on waiting for usually matching histograms to trade the pullback, the sig line, which is still very valid, a good confirmation, and or just the histogram on the bias index number 1 just had to be the yellow or gray color, didn't necessarily have to match red on red. So that's important to note too. Excuse me. So that in mind, now here's an example of a trade, and I'm going to get in a few seconds here, I'm going to get to the point of how we can be safer in this current market and avoid the whipsaw. Here's a trade where the dynamic trend band did cross over and reset the whole pattern, which is one of the rules. It's not a second level trade here, although it is a second level down move. It's technically not a second level trade because this crossover here reset the whole pattern. You see that there? So when the arrows signal the sell signal and the dynamic trend bands are matching, your permission to go short in the trade. That's exactly, well, that's the rule of Boomerang. That's it. In this case, it reset the pattern, not necessarily to bullish, but it reset the whole idea of Boomerang taking a second level trade. This is actually a first level trade now because of the reset. You had a sell pattern matching dynamic trend bands, which is one of the rules. Even if they're not, haven't crossed over on the downside, they're matching color. So this is actually a first level trade because this technically is a reset of the pattern. That's very simple. Nothing really to it. So once again here, now you have clearly with the Cobra crossing over, it's getting ready to reset the whole pattern. And the normal rule in the past would be, or it's still like that, but I'm saying I'm going to give you some solutions for these volatile markets. You see these are 1.5 point spread, and you got the dynamic trend band number 1 is bullish color, so you can buy these pullbacks to the signal line. The modification of this rule, which I haven't discussed yet, but there's a good example of it here, is if there were no pullbacks to the signal line here, and the market ran up higher, for example, you never tapped the signal line, you didn't have any blue dots, and they ran out because after 6 candles in from the new buy channel here, you're not going to get any more pullbacks to the signal line. It's a little late in the game. However, I recently, it was about, I think 3, 4 months ago, created a modification after I had tested it very thoroughly, and that is if you don't get that pullback signal line and the market still looks ready to set up for an upside move and you get a crossover, well, as long as you get a pullback, you can take a pullback to the Cobra as long as it's not any amount, but 2, 3, 4 candles maybe at the most. You don't want to do it way over here. It's based on the idea that there were no pullback signal line. The dynamic trend bands are matching color and crossing. You can trade a pullback to the Cobra instead of the signal line, and boom, there goes your trade in this case right here, flying straight up. Now, another important note too, and I've had some people say, well, you're looking at the charts that are still charts and you can see everything in hindsight. Kind of smart ass people sometimes. I get them very rarely. Everybody's so nice, but sometimes you get these people, and who knows, they got up on the wrong side of the bed, or their wife kicked them out of the house, or whatever. You never know. But the point is, I want you to know that when I program Boomerang, these dots are not going to print unless that signal line was traded at and tapped through in most cases. They're not going to hold and print on there. It doesn't matter how the line adjusts up or down. If there's a colored dot on a signal line, that price traded through that. You can clearly see it traded through here and here and here and here. The dot is only going to print when it's there. So I didn't even argue with the guy. He was just disgruntled. He had some. It was too good. He couldn't handle that. We developed a system that has 90% winning trades, and his mindset couldn't handle that. So he's trying to find something wrong with it. And I didn't even bother explaining it to him because, you know, there's so many nice traders that get it, and they get Boomerang, and I get all these great emails of how successful they are. So you get the kind that just they like losing at trading, or there's some mental thing there where they're so accustomed to losing they just hate people that win at trading. I've met some of those, trust me. It's why they still lurk around the trading industry with that attitude is beyond me. Anyway, with that in mind, I wanted to show you the basic rules. What I want to show you before I move on to what I want to talk to you about today, kind of like our bunker tactic, getting under the bunkers in this really volatile market, is go to resource. Everything I just talked to you about here, go to resources on boomerangtrader.com. Scroll down here. My apologies. Go over to, where did I place it? Let me just make sure here. Here it is. Everything I just showed you in great detail, explaining all of the different indicators, everything is explained on this video that I made. We didn't have a webinar. I made this on a Saturday and went into just very brief but very clear all the exact the 2 trade setups for Boomerang here. You see, that just goes in all the details what I was just showing you. So if you feel you want to know more because you're brand new based on what I just said, because I have to shift into something else now so we don't go too long here, just go over to 90% winning trade signals on that section, and you'll see right at the top the 2 Boomerang day trader setups. And it'll explain exactly the 2 setups you need to know for Boomerang. Okay, my suggestion and recommendation for what I call getting in the bunker, and making sure that we don't get blown out on this mega volatility is so simple, it'll surprise you, and here it is. What I'm recommending is to only trade matching dynamic trend band signals and ignore the others. And even if some of them would win, I mean, if you want to take them, it's your choice. But I'm saying, for example, let's go back. I'll just stick to the same chart, then I'll go over some recent examples. so you understand exactly what I mean. Now, obviously, you need to know how to use Boomerang. This is basically for traders who know how to use Boomerang, or they've had it a few weeks and been used to our regular system, which is still valid. But what I'm saying is take trades only where the dynamic trend bands are matching. They're so reliable. And the way the volatility is, it's kind of a trade-off. But what you'll do is you'll end up getting a lot of trades because the volatility is creating more trading activity, but you'll get trades that are very, very solid, like all the Boomerang setups are in regular markets, but particularly in these high velocity, high volume risk markets. Just take matching trend band trades. There's a winner there. There's no matching dynamic trend bands here, so there's no buy signal. When they curve back to the downside, there they are matching. Take a sell signal on the yellow dot. See that? Here's a buy signal here. Now, again, you have to follow the rules of the fat channels and stuff like that. You're not going to just buy this because the dynamic trend bands are matching. If there's a, 6 candles just ran to the moon and created a big fat channel, that's a different case. Now, you might say, well, what about this whipsaw and then this second level trade in here? Well, it's going to probably work out because the dynamic trend bands are so powerful. Number one. Now, one problem here is the wide spacing, but still, look at those matching. The pullback, the SIG line came in here at 49.75 and shot up to 56. So it did work, but the general recommendation is when you see a candle, red candle, gray candle, green candle, off-color red candle, green candle, spike green candle, spike down gray candle, spike up green candle, spike down gray. That's whipsaw. That's Boomerang telling you to stand aside. That's not Boomerang having a problem or anything, as sometimes I've had a couple of new people say. I go, that's the markets. Boomerang just takes the market and organizes the data and tells you what to do with it. That's all Boomerang can do. That's all any system can do, is organizing the data. Well, this data is telling you that the market is disorganized. The organization of Boomerang is to tell you it's disorganized and it's full of whipsaw and to stand aside. Do you see that? Now, one can say, well, what about here? Well, what about it? Prices came down here right from this low and shot up from 37.50 to 50, 20 handle leap in 1, 2, 3, 4 candles. 5, I guess. I wouldn't take this trade because they're flat here. We talked about this just a few minutes ago. So take it if you want, but it's a higher risk trade. You still have to use the rules of Boomerang, but what I'm merely suggesting here now is only to take matching dynamic trend bands. Let's go through a few of them. I just showed you a bunch of winners. Let's start from here. Winning trade. Fat channel, no trade. They're not matching anyway. The dynamic trend bands aren't matching, so there's no trade anyway. Matching dynamic trend bands here. We'll talk when they match, then we'll look at the trade. Winning trade. Matching dynamic trend bands here. This is one where they're crossing over. We talked about this earlier. Pull back to the Cobra. Winning trade. No matching dynamic trend bands here. Here they are matching. Pull back to the signal line. Winning trade. There's no match until we get right to here with the dynamic trend bands. Again, you're trying to minimize trades and avoid whipsaw. Here they are matching color. Pull back signal line. Winning trade. Notice all the trades have won so far. Here's a second level trade coming in. Pull back the signal line, matching dynamic trend bands at 40.10 quarter. The next low, the next candle was 40.05.50. 3 points there. It's a micro move, but 3 points. No matching trend bands here, right? Pull back the signal line, winning trade. They're all winners. You see that? We're just waiting to be safe in this current environment until watching the volume meter that I showed you. That's why I showed you that earlier. There was a reason for it. Watch that volume, see if it can tone down a little bit, and the whipsaw of the candles, the force of the candles. Matching dynamic trend bands. Obviously, you have to have a new buy channel open. pullback signal line, winning trade. Just wait for them. No matching dynamic trend bands here. Here they're matching, but there's no setup here. There was no pullback to the Cobra. It wasn't set up. Here's matching dynamic trend bands here. Buy a pullback to the signal line. Up they go. All winning trades. You see that? Yeah, I know they ran to the moon up here, but that's just nobody knows that they're going to do that. And if some slick fellow used hyper scalp and everything like I showed you how to do that and caught a portion of this move, then that's congratulations. You can do that, but don't just get real good at trading with Boomerang. You'll be much more happy that you get used to taking these scalps. It'll keep you very happy. They're all winners so far, what I'm showing you. Nothing here, look at, because, well, technically, look, the dynamic trend bands have crossed over. The normal rule is if they've crossed over and one is bearish, in this case with a sell channel, you can trade that pullback to signal line. If you're that's your choice. If you want to do that, of course. But I'm saying in this whipsaw environment, if you waited till they matched, no trade. But that's okay. Here it's like a chameleon, changing colors back and forth. No trade here. It's flat too. Notice that it's dynamic trend band number 2 is flat, and it's changing colors, and the whipsaw is going on. That's often where the whipsaw occurs, around the flat dynamic trend bands. Don't worry about it. Just wait. Look here. They're matching colors, right? The dynamic trend bands here are matching colors. Take that trade. Right here is the first pullback the signal line at 89.25. They held 3 points there, about 3.25 points, and came down. Another winning trade. Nothing matching here. Here they are matching. Prices shot straight up, no trade. Here's a pullback, no matching trend bands here. Here's a new buy channel, matching dynamic trend bands. Like I said, these are some of the most powerful trades, usually because a trend is established. You had a failure of the traders on the opposite side to push it the other way, and then they kick back in. Another winning trade. You notice that we got 100% winning trades following this rule in the most volatile markets I've ever seen. Yeah, you're going to miss a lot of volatility in the markets moving, but look at here. Here's another one. Buy channel, matching dynamic trend bands. That's your only criteria. I mean, you could use that criteria forever. If I change the rules to that, Boomerang, it'd be easier to teach Boomerang, that's for sure. But I want you to know that when they cross over, that's a powerful force. When the dynamic trend band number 1 changes bearish after a crossover, that's powerful. So you may not have caught this one here because it occurred on the line right as the new sell channel came in, which is got to wait for the sell channel. So this one here, well, they already ran here. So, and they've already crossed over and are matching colors, so you probably want to leave this alone. I think, let's see what it did. 49.75 came down to 44. It gave you 3 points, but that's a risky trade, and the idea is we're trying to cut our risk back. So yeah, they just blew out to the downside coming into the final hour. That's okay, but I'm just trying to show you the point. If you're concerned and you're worried about all this whipsaw, Boomerang's working beautiful, but just consider this, what I call, hitting the bunkers. The bombs are going off all over. Hit the bunkers and just wait for a clear sailing to make your trade. And the clear sailing signal is matching dynamic trend bands. Short it here. Still going to get 3 points. When they start matching color, there's a powerful force there. Yes, here, right here, just so you know, I mean, the regular rule is there's a 1.5 spread there. See 82 and 79.75? Let's move it a little closer to the next candle. Clearly, they're within a 1.5 here, 82 and 81. So you'd trade the next pullback the sig line. That's the regular rule. There they are crossing there. You can still do that if you want. That's not even a problem at all. But I'm saying for extra caution, let the colors match, then hit the pullback sig line. I watch this all day long, and it just over and over works. It's beautiful. Here's the second level trade there. You got to have that candle, that arrow of the reversal, and then you get the counter sell arrow back into the trend, pullback sig line, down they go. That's within line with what I'm teaching about the bunker trades. It's a new adaptation for hitting the bunker, and it's not all it is we're just saying just wait till the trend bands match, then take the pullback signal line. Otherwise, ignore the trade like here. There's no matching trend bands here. Signal lines got fired. Just leave it alone. And it's a flat dynamic trend band. See that? Here's the dynamic trend bands matching color here. The entry is shown at 1975, and they shoot up to 27.25. Oh, hallelujah! Finally, a stop out. They're very rare, but okay, right here, the whipsaw, and that's what's going on now. This whipsaw here at the 20 entry, whipsawed the trade out up to 27, stopped it out for 5 points. No big deal. It's part of trading. Boomerang rarely gets stopped out if you follow everything correctly. Now here's another classic example of a boomerang trade. The spread is very tight here, within a point and a half. They're just getting ready to cross over, and here's a pullback signal line. This is normally a trade that you'd take that's a winning trade. And like I said, if it doesn't pull back the signal line, there will be no dot that will appear on here. I can look at this chart a year in the future and scroll back to this, or I can set my ninja here and scroll back a year now, and all those exact signal lines and the time and sales will show in the historical data that the prices pulled back and tapped the signal line. And it doesn't have to trade through because we're not putting market order or limit orders there. We're just, when it taps the signal line, you enter the market. And there will be a couple ticks slippage. That's normal. It's no big deal. Sometimes a little bit more, but not usually. They're not matching till right here, so no trade here. No, there was a counter move, but no sell arrow, so no trade here either. You got to miss those. That's just the way the mop flops. It's better than losing money and getting stopped out. Here they're crossed over. So it's up to you. The colors aren't matching, but if they've crossed over, for God's sakes, you might want to take that trade anyway because that's the regular rule. That's the spread of a 1.5 or less is very powerful. Them crossing over is stronger even still, and matching color, of course, and crossing over is the strongest. So that's all I'm saying is take the strongest setup and just trade that. And if you miss it, go get a soda or something. Just come back because you might have some time. Here's whipsaw on a flat. Notice how it's always on that doggone flat DTB number 2. That's where most of the whipsaw is going to occur. Just don't trade the flat dynamic trend band number 2 with the whipsaw. But right here, buy channel, prices, the dynamic trend bands are matching, but you're in the middle of this whipsaw period. You're taking a chance that they could whipsaw the trade, but here's the dynamic trend bands matching, so what happens? Coming in at 55.5, and they shoot straight up and hand you 10 points. Well, you would only take 3, but I'm just saying that the move was 8 to 10 points there. Matching dynamic trend bands right here, but once again, fat channel because of the whipsaw. They ran up and up and then crunch. They just crunched them there. No trade. Just relax. There'll be one right around the corner. New buy channel opening here. Matching dynamic trend bands. A pullback to the signal line here, and 3 points. Up you go. Flat dynamic trend band. Whipsaw around the flat DTB. No color matches here. None here. But this is where you can use that modification rule. Here's the crossover of matching color dynamic trend bands. The most powerful setup for Boomerang is matching color dynamic trend bands, a pullback to the Cobra, and down they go. Now technically, again, right here, 66 quarter, 68 quarter. See that? The next candle right here, 66 quarter, 68. Still about a, 150 is the idea. Let's take the next candle here. 66 even, there it is. 67 within a point and a half. So technically this would have been a trade signal here on this yellow dot because you're going to take because of the spread being tight. But I'm saying if you want to be a little extra cautious, and look, they sold off here, 62 quarters sold off down to 57. Again, if you didn't take that because you were going to be extra cautious, you then use the modification rule. Cross over here, pull back to the Cobra, and off they go on the sell-off. So this is the way to, you can use it always, but it's just a really powerful way in these really heavy markets to try to get the safest trades as possible. Now here, this is like a mini fat channel, a little bit questionable if you want to take this trade, but the pullback came at the signal line at 66.5 and rolled back to 60. This one would have got stopped out, but the normal rule is if you got a candle of 3 points or more and a succession of those, like 2, 3, 4 of those, like this candle here was 55.5 to 66. There's an 11-point candle. Hello. I mean, it's not even common sense. It's just like, duh. That's a huge, massive whipsaw candle. You rarely see 11-point candle on our 450 tick chart. It's all because of this extremely volatile market. Well, then you say, well, what would I do? Well, if you're going to trade this and you feel good about it, you see everything sloping up, I'm merely suggesting you get a discount on this price up here at 66.5. Just trade it down to the Cobra or somewhere in the channel between the signal line and the Cobra if you want to just grab it in the middle of the channel. Somewhere in there, if you did that, it would have prevented getting stopped out. If you took it there, well, it's not the end of the world. Uh, we're just trying to get them going here. Thanks, Skip. Okay. Whipsaw, the arch enemy of every single day trader, without a doubt. And then they go running up here. And if you got a little discount here, then you didn't get stopped out and they ran up. You got to learn how to trade. It's not like a mechanical system where you just like a robot, you push buttons. You have to know a little bit about discretion to trade with Boomerang, but not much. Do you see any matching dynamic trend band colors here? No. Do you see any here? No. You see the crossover, I know, but even in a quote normal market with all this whipsaw going off on the what? Flat dynamic trend band number 2. I mean, that's an easy way to identify the whipsaw as well. You're not going to trade this whipsaw either with a flat DTB number 2 and whipsaw. There's no matching dynamic trend band color here. If you wait for that, here's what I'm showing you. This is the craziness of the markets these days. The volatility. It's not crazy. The only people that are crazy are those of us who are trading this crap. It's, who's crazy here? The people trading this stuff in the futures market, right? Well, that's okay. It's good kind of crazy. Most crazy people are the ones who invent things and create new things. Anyway, here's the dynamic trend bands matching here. You with me? Now they're matching. Now you get a solid sell channel, a pullback signal line, and boom, in 10. Well, let's see what the time is here. 1:51:52, and the next candle was several minutes later, but I can see that this probably pulled back within about 2 minutes. You got a 3-point move. 2 minutes. My God, you had 4 contracts and you made $230 after commish. That's darn good. So you're just waiting for the matching DTBs. Here's the typical counter move with you got to get that arrow to print, and then the counter sell arrow back into the trend, the pull back the signal line, and down they go. And you're matching, all the trend bands are matching. I mean, you can just look at the chart and say matching trend bands, matching red trend bands, yellow dot, I'm in. But you got to know the discretionary rule, the simple discretionary rules about fat channels and whipsaw. That's all there is really. Fat channels, whipsaw, and that's about it. And fat channel means if they run real hard in one direction, it'll show a fat channel if the price reverses here, but if it doesn't, you can see if they keep going, it won't necessarily show it like it would if they reversed here. But the way a fat channel is formed by 3-point or more candles, this one here is 78 to 60, almost 10-point candle crunch in the market lower, and then follow a 1, 2, 3, 4 more. That trade's over. They already sold off. But you got in short up here. Now, if you had the wherewithal to hold, congratulations, but I'm just saying the Boomerang setup gave you that. Now here, do you see dynamic trend bands matching? No. Do you see them within a point and a half? No. So this trade, even on a regular basis, wouldn't have been a valid trade, and certainly not with our new bunker approach. That's the new name I'll give it, the bunker approach, because the war is going on, the bombs are going off, and the best place usually to be is in a bunker, not out in the open where you can get really hurt. So you get in that bunker that's all bulletproofed and everything. And anyway, new sell channel, matching dynamic trend bands. There's the yellow dot there. It's kind of hidden under two bands. Down they go. Do you see that? That's the way to get them. Matching dynamic trend bands, yellow dot, down they go. You get them way down here, where the DTBs are kind of squishing together. You probably don't want to take these. It probably panned out. Let's see, 2075, you drop down to 15. Even this one still panned out. It's so effective, this one and this one. But I'm saying just match up the dynamic trend bands. Like a case like this where they're right on the verge of crossover. You might have wanted to buy this one here. If you didn't, don't worry about it. Let them match. And then don't take this one because that's clearly a fat channel. And how is that formed? See, this stuff is so easy to learn. Look at the size of this candle. It went from 23.75, one candle, to 34.50. 10-point plus candle followed by 3 further jams to the upside. Don't pull back. Don't take them at the signal line. If you absolutely feel you desperately got to get in, which you shouldn't, at least for God's sakes get a discount. And what I call a discount is trading into the zone below the dynamic or the signal line in the Cobra, ideally at the Cobra, but you may not hit it all the way, but try to get them in that zone. That's the discount zone there. But that's for, experienced boomerang traders. You got to know what you're doing to do that. Now here, again, this is the whipsaw. This is not anything wrong with boomerang. It's not anything wrong with you. It's just the markets are historically the most volatile ever before in history. Once you understand that, it'll all make sense. This is not normal. Look at this first candle launching off here, 34 to 43, almost 10 points. The second one, 38 to 46 almost, 8-point candle. Here's another one. I've never seen anything like this. I have never seen anything. I've been teaching boomerang for 8 years, 7 years. I've never seen this kind of volatility. 43, I saw it in 2008 to 50. A 10-point candle, an 8-point candle, a 7-point, 3 in a row, followed by a fourth one at 50, running 57. A 10-point candle, green, all bullish candle, a 7-point or a 6-point, a 7-point, or an 8-point, and a 7-point, all in a row. Friends, don't trade the pullback signal line. That is a fat channel formation. That's how they form, by these rocket ship off the reversals. And no one knows when that's coming. Some guys, some hedge funds or somebody just piled on there on the bull side. Who knows? It might have been influenced by the Federal Reserve riggers, and they don't trade our mini NAS. They could buy the whole thing in one click. They're trading baskets of millions of stocks with 1 or 2 clicks, across the board, NASDAQ. And that's going to, of course, affect our mini NAS charts. That's where that's usually coming from. There's so much of that going on now. And we don't like missing trades, but right now with this volatility, Boomerang's going to get a lot of fat channels. I'm showing them to you now. There are going to be a lot of fat channels with this volatility. Don't get mad or blame anybody or blame Boomerang or blame yourself. It's the market. It's the most volatile in history. I keep repeating that. I want you to fully understand that. Here's the dynamic trend bands matching. Here's a pullback to signal line. Boom, up they go. But once they shot up here, look at this candle. This is wild. 39 to 49. 10-point candle shooting straight up, followed by 2 more big ones. You don't want to trade that pullback to signal line. It's a fat channel. You got to wait and just ignore the trade. Then it goes into mega whipsaw here. Better to just wait for the exact setup. Here's the dynamic trend bands matching right here. You get in here at 44.25 and they come down to 41.25. Just squeezed out 3 points and started whipsawing the trade. Let's see if it held here. You might have got this one. They were just barely matching then, probably just blinking. The DTB number 2 is probably blinking red right when this hit. And let's say you took this one here at 44 quarter. You just, if you got that exact price or maybe a dab higher, you might have eked out 3 points. Otherwise, let's see, 44 quarter. It actually held, well, let's see, 44 quarter. 49 was a high, missed it by a tick. Odds are, if you got any worse price than 44 here, 44 quarter, you would have got stopped out. That's the whipsaw. So far, we've only had 2 stop outs out of all these winning trades. So I'm just showing you the bunker method. You could use it all year round, but I highly recommend it in these volatile periods. Just make less trades, stand aside and wait for all the DTBs to match and save yourself some grief, because this is wild action here. Now we're getting closer to the end of the month. Look at the whipsaw coming in. Let me speed up here, and then I'll turn off the tape recorder and we will move forward. Matching dynamic trend bands right here. Look at that. Sell channel right here. It's flippy, but as soon as you get a matching dynamic trend bands, well, it's whipsaw and it's a flat DTB. You're taking some risk here. This pullback to the signal line here probably went higher than it before it went lower. 42.10 quarter, ran 42.15. It just barely hit the 5-point stop on a massive 6-point whipsaw candle. If they went lower first, then you got 3 points. If you waited because of the whipsaw and maybe hit them here, you would have got a nice trade, but it's just have to wait, you know. Here they're matching, no trade. Well, you could use okay, on this one, this is where you can use the modification rule if you understand it. It's very simple, and you'll have a recording of this so you can follow it. They used up the pullbacks of the signal line here. You're waiting for the DTBs to cross. You wouldn't have had, none of these would have been a valid boomerang signal even in using the regular approach. Here's a crossover. So you can trade a pullback to the Cobra if it's in, like, say 3-4 candles here. 1, 2, 3, 4. They pulled it back to the Cobra here. It looks like they hit it and traded through it here. That would have been a buy there. You could have taken that trade. Here's a second level trade that fails. New buy channel, pullback signal line, matching dynamic trend bands. Up they go. More whipsaw, and it's early. This is the first hour into the day. Just a whipsaw, out of control whipsaw, and this lasted from 7:20 my time to 7:04. Well, not a big deal, but about 10-15 minutes of solid, ongoing, in-your-face whipsaw, flashing up and down. I mean, you watch that for 10 minutes, it'll drive you nuts. 'Cause you're waiting for a trade and you're going, God, I want to trade. Well, if you're patient, and this is something good to do when it's whipsawing anyway, is either stand aside or just wait for the dynamic trend bands to match. It's the easiest solution. Look, here they are here. New buy channel, right? There's no match until you get to right here where this candle whips up to the upside. Pullback signal line, everything's matching, and there's your winning trade. Same thing here. New sell channel, all the bands are matching. Boom. Just watching dynamic trend band 1 and 2. Of course, the Cobra is going to be the same color, because if they've progressed that far, the Cobra will match as well. Matching dynamic trend bands. This is one of those things too where they ran them up, formed a fat channel on 1, 2, 3, 4, 5 huge whipsaw candles. Here's the crossover. If you got the guts, take the pullback, the signal or the Cobra there, and you would have had a winning trade. And again, it won. This is whipsaw for you. It won by going long at 22.75. It won on red candles, getting whipsawed to the upside for literally 8 points. But they're all red candles. It's not Boomerang's fault. It's just the market is so volatile and fast. You can program everything in, and sometimes it's just the speed and the sheer speed of the tick data overrides the system printing in time to change the color of it. Yeah, just wait. We'll get some normal markets soon. Look at that. Dynamic trend bands matching color right here. There's a yellow dot there and there. Both. I mean, you could have taken them both and achieved 3 points and 3 points. You don't want to do that normally. Just take that one trade there with everything matching. If you miss it, take this one. Should be okay. Here's the dynamic trend bands matching. You see that? The number two matched before number one here. You got blue dots right here, but you don't really have a match. If you knew what you were doing, you could have taken a pullback right in here, just adding a little pullback to the Cobra, or wait for the Cobra here after they cross over, confirm they're going to cross, then take the pullback to the Cobra there. That's that modification rule. That's okay, because the simple thing is if the sig line pullbacks get used up before there's an actual crossover, you can trade a pullback to the Cobra. I tested it on, I forget, like 100 some charts. Took me all weekend, very meticulously, and it works. It's beautiful. It's a beautiful modification. Here they go. They pull back. They actually, look at that arrow printed there, that doggone arrow printed, so that lets you know you can take the next pullback, the sig line, on the with all the trend bands matching, which occurred right on the candle, and then they shot up. So now you're in a riskier situation because we already had a massive whipsaw run up, pullback, run up, huge whipsaw candles, whipping back again. If we were watching this live or on replay, it floors you. It makes your head spin. If you caught that pullback, you had your finger in the trigger, you're okay. Otherwise, you don't want to trade these because they've already shot up. Very risky here. And you can see it got started at 32 half, came down to 26 half. But it's not a trade, not when they shoot up like that and form a fat channel. You got to be careful. And that whole process of shooting up and down continued all the way till they just had a blow off ramp up here. So again, you just let it pass, watch and wait. Here's the matching dynamic trend bands right here, crossed over and matching. And there's that pullback sig line, and down they go. Yikes, more whipsaw, intense whipsaw. If you had your finger on the trigger and you saw that yellow dot print right as the air channel's opening, you might have caught it. Otherwise, good luck. This one here would have probably been okay. 34.75. Held the stop and pulled back to, well, 32.50. 34. Yeah, you would have had to get out of this trade. But again, look at the pattern. It's awful. You already had this one. This is like you're essentially trying to take a second level trade, right? But look at the pattern. You don't want that kind of second level trade. You want these smooth, well, the one we had short while, smooth second level trade. Those are the ones that are really good. So anyway, I could do another few charts if you want, but essentially you get the message here. Look at that whipsaw, man. Stand aside from that crap. If you got the guts, wait a while, wait for the crossover, wait for the new buy channel, pull back the sig line, and you'll get whipsawed right straight up and you make some fast money, but you better get out because look at what happened. They ran up to 47 half. Two candles later, they're down to 30. They're down 11 points. Just it's fast action. Love the fast trades, but super high risk. Cobra's blinking on and off here. If you saw these match and you took this, they whipped it out here. 35.50, 41.50. This one got whipsawed out. Ideally, you'd wait for the crossover in a situation where the Cobra's blinking on and off, and then try to, here's the crossover, so you're using the modification rule, selling the Cobra, or you got stopped out, or you just stood aside. Either one's fine. They're all, a good result. But taking this trade with the matching DTBs here might have been, something you might have wanted to wait on because of all the previous whipsaw. It's not going to end just in one flash, Things take time. Here again, shooting them straight up. this trade panned out, but very risky buying this pullback sig line here, but it did pan out. Nothing matching here. Well, here again, where the Cobra's flat, it starts acting like a chameleon, blinking on and off the colors here. You didn't have anything till right here, but if you shorted at this pullback the sig line, the next lower level from 40 quarter was way down here at 35 quarter. So you got 3 points out of that. More whipsaw continues. Early morning whipsaw. If I'm just showing you, you're seeing now, this is what's been happening. If you're trying to match the trend bands and go short here at 42 quarter, that's fine. They came down to 39, but you better have gotten out of that trade right there, because all of a sudden they're at 46 quarter. You see that? Say you got 42.50 and you're looking for 39. 39, yeah, it would have been 3 points. They went to 39 quarter and then shot to 46. That's just the whipsaw. It's not Boomerang's fault. It's the market is most volatile in history. Usually when this happens, coming off of a flat DTB, even with a crossover, wait for the second level sell. Because if the trend bands are matching, they'll get a second level sell. Now look how smooth that one is. Sell channel, matching DTBs, straight down they go. No second level here. Just let them go. Not much you can do. Technically here would have been a tricky normal trade with the dynamic trend bands matching. This pullback here became treacherous. But this would have been a modified trade here. 32.75 area buying them. And it looks like this candle made low at 31, and just measuring this, say you got long here 32.60, this candle made low at 31 and ran up to 35. So there was 3 points in this pullback of this candle, and then it shot up to give you 3 points. And then look what happened, just whipsaw crunch to the downside, forming a sell channel. See, they're not going to do this under normal circumstances. It's just the massive volatility. Here again is a second level pullback the sig line at 35 quarter that ran up to 38. Pulled back to 32 again, ran up to 38, pulled back again to 31, ran up, and then the whole chart pattern changed. You'd have had to stop them out there at break even or a small loss. But then all of a sudden, everything's matching again. You buy that pullback the signal line, and up they go. See, if you're in this pattern and you see this and they get crunched like this, and then you get a counter buy arrow shooting up, and you're sitting there watching all this, don't be anxious to trade that. It should frighten you. It should make you say, whoa, 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 I'm going to go take a break. Come back from the break in 5 minutes and then watch this here, a smooth, tighter pattern. That's what you want to look for. Same here normally. Well, this wouldn't have been a trade in either circumstance. And they just fell off the wagon. And they fell off the wagon. They fell off the wagon. Matching dynamic trend bands here. Pull back the sig line. 31 quarter comes down to 24. See what I mean? If you got the dynamic trend bands matching and you trade the yellow dots on the sell side and the blue dots on the blue side when everything's the green, the bullish color, it's really good. Now here they just slaughtered them and you couldn't get in unless you just kind of traded a pullback somewhere in there. So you get the idea. I could finish up the rest of the session, but this is going on all month, and you just have to wait to see, when you get a weird stacking sequence like this, you just have to be willing to say, I'm going to let it go, because your capital is at risk here. Here's a nice trade here. Wasn't as many whipsaw can. Notice this is a little more tame, like sell channel, and it's more tame, but you see when they come off of here and they shoot straight up, that's the sign. These stacked candles that just jam in one direction. those pullbacks, this pullback worked out. 1850 jammed up to 22, but super high risk because if you didn't get out at 22, you thought, oh, I'm going to get another point or two out. Well, got hammered. So volatile. Matching DTBs, up they go. I could keep going, but I think you get the general idea. I'd rather go to your questions now so we can kind of end this session a little bit early. So I wanted to thank you for joining us here today on this recording, and we'll look. I'll now go over and we can answer your questions.